Hello traders, Gary Wagner here. It is 12:49 in Honolulu, 5:49 in New York on Wednesday, February the 9th, 2022, and this is the Daily Report for gold and silver. Now for the fourth consecutive day, we have seen gold prices rising. This has a lot to do with the release of tomorrow's CPI report, indicating what the current level of inflation is. As of December, CPI index was sitting at a record 40-year level of 7%, and forecasts are that it could go as high as 7.3% tomorrow. Gold basis the most active. April contract gained $6.30, and as of 12 noon in Honolulu, 5 o'clock in New York, is currently fixed at $1,834.20. Although dollar weakness today contributed to the gains seen in the precious metals, it was fractional at best, with the U.S. dollar index declining by 0.10% and is currently fixed at 95.545. Silver has also gained in value the last 4 consecutive days, with the March contract currently up 0.47%. It has outperformed gold in terms of percentage gains recently, one, because it is reacting to increased levels of inflation, and secondly, U.S. equities have been relatively strong over this last week, and the industrial component of silver and the possible increase in demand is another factor. Currently, the March contract of silver is at $23.31. This first chart is a daily candlestick chart of gold futures. As we spoke about yesterday, we're looking at 3 distinct moving averages: the 100-day in blue, 50-day in green, and 200-day in red. We've talked about the fact that over the last couple of days, we have seen the gap between the 200-day and 50-day moving average narrow, which really increases the probability that we could see a golden cross between the 50-day and 200-day moving average. We have converted our daily candlestick chart into a Henkin Ashi or Japanese average chart. And in terms of looking at it for a perfect setup for a bullish rally, we can see that in gold. We had a series of declines marked by large red candles with no upper wicks. We then had small bodied candles that were, for the most part, green. This one was unchanged. And over the last 3 trading days, we have seen body size grow and the lack of lower wicks across the board. This is a very positive sign and indicates that the strength of the current uptrend is intact, which brings us to our current trade. We are long the April contract of gold futures, as well as spot or forex gold at $1,790. We have recently raised our stop up to $1,790, and we will analyze throughout the day whether or not we think the proper move is to trail our stop higher before the release of tomorrow's CPI report, which will come out at 8:30 Eastern Standard Time. This is the daily chart we have been using recently, which expresses our current Elliott wave count, the fact that gold has been trading through a series of lower highs and higher lows, or a compression triangle, and the distinct possibility that we are expecting to see gold break out at some point above the current resistance area, and that is this upper line right here. We have had a basic model in which we just drew in A, B, and C. However, that is not necessarily how the actual price of gold will work out. Of course, at any point it can begin to decline or continue to rise. And that's what we will weigh as we determine whether or not we want to trail our stops up. We believe that if in fact we are correct and we see a break above current resistance, which is right around 1840, gold is trading at 1834. We would really see a pop. I would look for a pop as high as initially 1850 to 1873. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow following this CPI report. Have a great day. Bye-bye.